Worldwide Asset Exchange, and Tether co-founder William Quigley's with us. William, it's good to see you again. I wonder, this is another story where there is arguments on the speculative side, but also on fundamental analysis of at least money flows.
Yeah, I agree. If you look at where we are pre-halvening, that's going to happen in April, where Bitcoin's reward for miners drops by half. If we look at where we are versus the last one, I'd say, which happened 4 years ago, we're in better shape. Obviously we didn't have the ETFs back then. If you look at things like derivative volume, it was nascent 4 years ago, now very high, we just hit a record. And the ETF flows have actually surprised me. I was a little skeptical that they would take off quickly. And now we have close to, I want to say $50 billion. It's about 740,000 Bitcoin held in these ETFs. Daily, we're getting between 150 million up to $500 million flowing in. So there's a lot of positive forces that are pushing Bitcoin up right now. And this is before the halvening, which is usually after that fact when Bitcoin really skyrockets.
How do you describe to viewers the mix of institutional versus retail interest vis-a-vis, say, prior rallies?
Oh, anything from like pre-2020, there was very little institutional interest in Bitcoin. It was a retail-driven, globally retail-driven phenomenon. And now I would say there is a lot of institutional money that tracks it. It's also why you see such interest in derivatives. The volatility in Bitcoin, I think, is one thing that really attracts a lot of institutional investors. And you have to understand that, Bitcoin is maybe the only globally traded asset that I know of whose demand is purely based on sentiment. There's not a Bitcoin company, there isn't Bitcoin price earning ratios, it's just a sentiment driven token. And what you can say about that, of course, is that sentiment has no limits. You can always be more optimistic. And so this rally may be the biggest we've seen. If we just look at where we stand today, pre-halvening for Bitcoin, and look at historical patterns, that would suggest, and I'm not predicting this, I'm just saying if you applied the historical patterns, it would suggest Bitcoin being in excess of $300,000 at the peak of this next bull market. And since all tokens are correlated to Bitcoin, that means that all the other tokens like Ethereum and Solana and some of these others will move up in lockstep. Those, however, usually move higher, directionally the same, but since they have a lower market cap, they tend to move up to a greater degree.
What about Tether? I know that your price doesn't move up, right? You're tied to 1-to-1, but there's been a lot of interest, and I saw that you passed the $100 million market cap. I think it's the first stablecoin to ever do that. What is driving that? What's the significance of that?
First, it is the first stablecoin, and so therefore it's and the biggest. The Tether is the entry point for acquiring Bitcoin or any other crypto for all the institutional buyers. Most institutional buyers first acquire Tether and then go and buy Bitcoin, and the reason is because virtually all trading pairs that have any sizable volume with Bitcoin are matched to Tether. Tether is the way you acquire crypto. So when you see the Tether market cap going to 100 billion, what it's showing you is there's a lot of anticipation of people waiting to get in or getting in right now, not just through ETFs, but buying actually on the exchanges. And I should mention, the exchanges only have less than 10% of all Bitcoin that's ever been mined. So there was a day not that long ago where the ETFs acquired 10 times in that day the amount of Bitcoin that gets produced in a day. So there's only 900 Bitcoin acquired in any given day. Next month, that will be 450. So if this volume of buying keeps going on the ETFs, supply is going to be constrained, which of course is likely to affect the price.
Yeah, definitely a far cry from 20K, which is where we were roughly about a year ago. William, appreciate it. We'll be talking soon. William Quigley.
All right.